Hey VV Nation, welcome to our YouTube channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and I love bringing these videos to your attention. And this is a great video for a lot of you who listen to a lot of the talking heads out there or from news articles or anything like that. A true way to analyze any stock before you jump on board with it. A lot of this news-driven stuff can get you to want to go buy into a stock only to see it fall. A lot of times the news does move the stock and you need to know, do I need it longer term, or do I play it shorter term? And the VectorVest way of analyzing stocks is, bar none, the best out there to give you a true picture of what a stock is worth, if it's safe, does it have upside potential, is it going up in price right now, and an overall ranking as well. All right, so if that's what you're really interested, you're in the right spot, because nobody does what we do. Nobody. All right, let's get into the program. Here's a listing of stocks. I went through and just looked at a lot of different resources to see what stocks are being talked about. From that perspective, I've built a watch list. From this watch list, though, we always know when you build a VectorVest watch list that they are already sorted by our master indicator, VST. So the stocks with the best combination of value, safety, and timing are already migrating to the top of the list. Folks, this is by far one of the most important things when looking at a group of stocks that are being talked about by a lot of people. All right, this is important. Not just that we built the watch list, but that the watch list already starts to go to work for us in analyzing these stocks to determine, out of all of these stories, out of all of the people who are talking, which stocks really, by way of VectorVest analyzation, are the best stocks to consider. So when I look at this, I've got 11 stocks. TSM, why do I have this in here? You know that Samsung just committed to building the biggest chip factory in the world. It's going to be in South Korea, though. Microsoft, ChatGPT now went to GPT-4, and we'll see what goes on with that. AI is still hot out there. ExxonMobil, oil is starting to be coming back into the picture of stocks to get into, but is it really truly what we need? Schwab, because of the banks, is in there. Protagonist, well, you got to have some kind of a biomed stock that's always at the top of somebody's list, and Protagonist is in here. Here's a bank. Box. Box is being ranked by a lot of different analysts as a stock to buy. CCJ for uranium. I just did a video on CCJ, and we're going to take a look at it because it's in the news. Credit Suisse, big story. They got bailed out by the Swiss National Bank. Let's go see if it's worth it to buy. Boeing, big story. They got a big order from India for a lot of planes. Is it translating into an opportunity to buy? And Chewy's on the top of a lot of analysts' list as far as a stock to buy. So these are stocks that have made the news, but now we're going to do some real analysis outside of what the people say to see, as an investor in the market, are these stocks you want to go into? Now, the first thing I like to always talk about, is value. We give every stock in our database an intrinsic value, what we feel the stock is worth. Now, why is that important? Because our motto is to have you in safe, undervalued stocks that are rising in price in a rising market. Why is the undervalued part important? Because stocks over time tend to meet their value. So if you're in an undervalued stock, the propensity of the stock's price to rise to meet the value is there. If you're in an overvalued stock, the propensity is that over the next 1 to 3 years, the stock's price should fall to meet value. So you rather to be in an undervalued stock. Does that mean that overvalued stocks are bad stocks? No. It just means that people are willing to pay a premium to own that stock. But keep in mind, overvalued stocks tend to fall to meet their value. Then we've got all the dollar change and percent price change. That's fine. Now let's get into the meat and potatoes. Relative value, relative safety, relative timing, VST. A lot of people say out there that I don't need VectorVest because I can get all of this stuff for free out there. And no, you can't. What we have here are proprietary indicators based to give you a true, well-rounded analysis of a stock. Not just what I say, not just what Kramer says, not just what CNBC says. all of the resources that I use, it goes beyond that to give you a well-rounded, true, in-depth analysis on the stock. Let's start with relative value. And by the way, all of these indicators, all of these proprietary indicators are all cast on a scale between 0 and 2, where above 1 is favorable, okay? Relative value looks at a stock's long-term price appreciation potential, long-term upside. Do I want to put my money in this and be comfortable knowing that over the next 1 to 3 years, this stock should outperform the stock market? That's where you get that information from. RS, relative safety, it's an indicator of risk. How risky is that stock? Below 1, more risky. The further below 1, the more riskier the stock is. Relative safety looks at the stock's ability to make money quarter over quarter, year over year, consistently. So high relative safety stocks are what you really want, again, for long term, where you want to put your money. These are our fundamental indicators. And why I say you can't just get this information everywhere is because we're one of the only companies, if not the only company, when we analyze a stock, we look at the fundamentals with the insight of technical analysis. Relative value and relative safety are our fundamental indicators. Relative timing is our technical indicator. It tells me if a stock is going up or down in price right now. Above 1, stock's in an uptrend. Below 1, stock's in a downtrend. The higher above 1 or the more below 1 it is shows the dynamics of how high in an uptrend it is or how deep in a downtrend it is. So when you combine these 3 indicators, relative value, relative safety, and relative timing, and put it into one master indicator, VST, which stands for value, safety, and timing. When I can see a VST above 1, altogether I know that the stock is a decent stock. But there's other things within the analysis that makes me think, is it a long-term play? Long-term, I'm trying to stay in the stock for a couple of weeks, couple of months. Or is it a short-term play where I'm trying to stay in the stock for a couple of hours to a couple of days? So I wanted to define the terminology of long-term and shorter-term in that statement. I'm not going to go over a lot of these other indicators. I want to concentrate on these 4 primary proprietary indicators. So now as we analyze it, TSM trading at 86, value of 118, undervalued. Microsoft, overvalued. ExxonMobil, undervalued. Schwab, undervalued. And normally when I have an undervalued company, remember the stock's got the potential to outperform the market or actually just raise over time to raise to its level of value. Protagonist, oh man, way overvalued. Does it make it bad? No. It just means that there's a lot of news out there and people are willing to pay a premium based on that news, based on that perception of that stock. First Republic, bank, way undervalued, but it's been beaten up. Box, undervalued. Cameco, overvalued. Credit Suisse, nicely undervalued. Boeing, with all of the orders they're getting, way overvalued, but that makes sense. Because of the news behind the orders that they're getting, people are willing to pay a premium to be in Boeing. But it is way, way overvalued. And then I look at Chewy. Chewy on a lot of analyst lists as buy, way overvalued as well. All right, now let's look at our indicators. Relative value. TSM should outperform its AAA corporate bond by 50% over the next 1 to 3 years. How about ExxonMobil should outperform a AAA corporate bond by 57%? But wait, it's a sell. Long term, it's got good upside potential. Right now, it's a sell because the stock's relative timing is below 1. That's what's hurting the stock. Looking at Schwab, should outperform a AAA corporate bond by 53% over the next 1 to 3 years. First Republic Bank, which is getting all caught up in this bank frenzy, still has great upside potential. Box, upside potential, 32% should outperform a AAA corporate bond. Look at Boeing, though. Upside potential is not there. Even though the news is showing that it's getting the contracts, upside potential is not there. Chewy, upside potential is not there. Relative safeties, the companies that are the least risky, TSM, Microsoft, Schwab, Those are the only 3 out of the 11 that have good safety. Relative timing, which stocks are in an uptrend. TSM. Notice that TSM is at the top because the fundamental analysis along with the technical analysis makes it a good, viable chance for the stock to continue to move higher. Microsoft, the upside is not there, the safety is there, and it's in an uptrend. It's the only stock in the list that's a buy recommendation. What else is going up? Wow, the protagonist, which is the pharma, is nicely moving up on news, but fundamentally not sound. This is where the analysis bears what it's designed to do. I can see that this is making the news on what it's doing. It's in an uptrend. Long-term upside, not there. Safety, not there. As I look at this, based on the story, I know that it's in an uptrend. I know now from analysis, this is a short-term play. And that's what the analysis bears out as you look at these stocks. There's only 3 stocks in this list that have a relative timing above 1. Those are the only 3 that are in uptrends. So now let's do one last thing. Oh, and people always want to know when they should get out of a stock. VectorVest gives a stop price to every stock in our database. How do we calculate the stop price? It's a 13-week moving average adjusted for the fundamentals of the stock. So when we look at assigning a stop price to any stock, we look at the analysis. Is it fundamentally sound? If it's not fundamentally sound, we will raise that stop price to get you out of the stock faster. But if the stock is on solid foundational fundamentals, we're going to lower that stop price to keep you in that stock longer. Now, a lot of people will say, well, the stop price is just too wide for me. Then don't use it. But it's there as a guide. Use it as a gospel or a guide to help you to manage the stock once you're in it. All right, so let's go look at the graph of all of these stocks. I'm going to put these on a 3-month graph. I'm going to use, remember, if I'm trying to look at these longer term, I'm going to use a 20-day exponential moving average, but we're going to look at certain things. I want you to have certain things on your graph to help you to make a decision. Why? Because a picture is worth 1,000 words, right? Is it undervalued? I want to be able to quickly see that. So I'm going to add value. I'm going to add support and resistance from a technical perspective. I'm going to add a 20-day exponential moving average from a technical perspective. I'm going to look at earnings from a fundamental perspective. I'm going to look at dividends from a fundamental perspective. And I'm going to look at RT from a technical perspective. So as I pull up this picture, I can make a decision pretty quick. So I can look. Relative value on TSM is great. Relative safety is good. What don't I like? Well, a couple of things. The stock's price is falling. It's below the 20-day exponential moving average. And watch, earnings per share is falling. So what are they doing in regards to that? They better bump up in their dividend so that it will attract more investors into the stock. RT was middling around, right now above 1, but pulling back. I would wait. Even though it's fundamentally sound, the timing may not be right on the stock. What am I looking for? Let's look to see if it can get above this 20-day exponential moving average. Let's see if it can break above this level of resistance before I go buy into it. So fundamentally sound, technically sound, but falling. This is where the analysis helps you. Let's go to Microsoft, way overvalued. Now the news with the ChatGPT 4 could be pushing the stock's price higher. New over the last 3 days, moving up, coming off a level of support above a 20-day, just broke through 2 levels of resistance and just got a buy recommendation as RT has risen. What I like, relative value below 1, it's a safe stock, but I might play this and use that level of resistance as a means to get in. But I would make sure, watch that RT as a way to back me up as I stay in the stock. Next one, Exxon, undervalued. Man, long-term, do I like this? It's pulling off that high. That tells me enough right there. Below the 20-day. Earnings looks good. RT is moving down. The stock's in a downtrend, and it looks like it might be into a protracted one. Don't know. Let's go to the next one. Schwab, big hit after all of this bank stuff, but look at the rebound coming off support on good volume. Woo! Watch the earnings. Another sign that I'm looking for is for RT to go back above 1, and it's a sell recommendation. Let's go to the next one. Wow, PTGX looks good. Bottom left, top right. If you're in it, you're fine. How do I know how to manage it? Put the stop price on number 1, number 2. Technically, let's go see if this level of the 20-day holds. Earnings per share looks good. RT falling off a little bit, but nicely above 1. I like that play. All right, but when would I get into it now? When it takes out that high. Let's go to the next one. First Republic, man, smoked. I liked it long term, and then it fell before all of this fiasco kicked in. Looking at the graph, it told me that it was below the 20-day and falling. Now it's falling so much, it's undervalued. Fundamentally, the stock is good. Relative value is above 1. Safety is just at 1 or so, close to it. It's more of an aggressive play. Let's go look at the next one. Box. Ooh, the news drove Box up. Look at that. That is a bullish engulfing candlestick pattern. That could be starting up on a rise. Earnings per share doesn't look so hot. The stock is below the 20-day and falling. Could this be the start? Let's go see if we get some more confirmation to the move. CCJ, I just did a video about the U.S. putting up a new reactor. Earnings per share looks good. Relative timing below 1, below the 20-day, at a level of support. Let's see if that level of support can hold before I jump on board, though. Let's see if we can jump back above the 20-day exponential moving average. Credit Suisse, big bailout, big jump at the open or going into the open for today. We'll see what happens. Right now, long term, I don't like it. Relative value is above 1, but look at the graph. I'm not feeling it, not until it breaks above that level of the 20-day and that level of current resistance. Boeing, big news with this story of the sale of more airplanes. Leveling out, not falling like a lot of the other stocks, leveling out, beautiful level of support, sitting at 160, 196.96, beautiful level. Let's see if that level will hold. Watch the earnings per share, and the stock is in a downtrend right now. The last stock is Chewy, a little bit of a sideways move, currently below the 20-day. Love the earnings, though. Earnings is the engine that drives the stock's price high. I love the earnings. But let the stock come to you. Let's see if the stock can break through these 2 levels of resistance and go back above the 20-day exponential moving average. Folks, that's all that I've got to bring to you today. And hopefully, for many of you, it gives you more insight on how to really, truly analyze a stock before you jump on board, no matter who's talking to you about it. Whether it's me, whether it's a talking head on TV, VectorVest gives you the true analysis, deep dive to help you to make the right decisions at the right time. Folks, this video is over. Until the next time, see ya.